Hello, 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 everybody, and welcome back to our monthly series. What's happening in the real estate market? What do you want to know Wednesdays? And I'm Kathia Green, your local South Florida realtor, and I've got my handy dandy partner with me, Eileen Garcia.
Hello, everybody. How are you? Today is the 18th, March 18th of 2026,
Time
and
is flying.
the year is flying, the month is flying. I mean, it's moving.
It's moving.
It's
It's moving.
definitely moving.
Well,
So,
everybody out there, I hope everyone's doing well. And what we're going to present today is what to do if you're going through a divorce or any life changes and how that affects your buying a property or having to sell the property. Arlene, so, sometimes I get clients that are telling me, they may not want to sell their property, but they're going through a divorce. And so one spouse or the other is kind of forcing their hand, or they are unsure that they can continue to pay that mortgage on their own without the spouse's contribution. And so that's what we're going to talk about today. And since divorce is a major life change, we'll talk about other life changes as well that affect, buying a property or selling a property, whether it's retirement, downsizing, because now you're an empty nester, or you're growing your family, so you need a larger property. Just having to move out of the area, just varies or the death of a spouse, as well, where now you're the solo spouse responsible for this property. So we wanted today to let people know what their options are for navigating through these life changes as it relates to getting a mortgage or adjusting their existing mortgages or having to sell their properties, and kind of a checklist in advance of what to look for. And hopefully maybe that'll prompt some questions as well from our viewers. So I'm going to let you take it away.
so yeah, of course, after a divorce, buying a home can feel very overwhelming, but it's very doable with just a little bit of planning. And just like any life changing moment, whether it's a death of a spouse or like a divorce, just a little bit of planning is all it takes, but it's very, very doable. The first thing that we look at is the person that's getting a divorce. What are they going to do? What is their current situation? If we're taking care of just one spouse for the mortgage or for the financing, and you're helping them look for the property, what are they going to, like, what is their current income looking like? Are they going to be able to qualify by themselves? So that we have to make a plan, because now you're going from two incomes to one income. Now,
So when you make that assessment, and I think so that brings up another question where sometimes the force of the sale of the property is generated by one spouse, but the sale could be also forced because one spouse alone can't afford that property.
correct, correct. So if one spouse alone cannot afford that property, you have options. So you can always have that you sell the property, everybody cashes out, you take your part, the other person takes their part, and that's very doable as well. That's where you would come in to sell the property.
Mhm.
So that's extremely doable.
Okay. And or if their finances make it where they're able to maintain it, then it's just a matter of refinancing it and removing the person's name, which is done through a divorce decree, because that's what you guys would need to be able to do that, correct? Because it
Correct.
would be starting a brand new mortgage with the one single spouse. How does
Correct.
that work?
So if the one spouse decides, I'm going to keep the property, it's on the divorce decree. They've already established who's getting what in the divorce, splitting up of assets. You can do, and but you can buy out a spouse. And you
Okay.
can do that with a refinance cash out and pay them out the money that is on the divorce decree, so they can move out and do whatever they wish with that money. Or you can do what's called a home equity line of credit as well, and,
Okay.
and buy them out. So
Okay.
that's another option.
So when it comes to, one of the things that we talked about earlier when we were preparing for this meeting today is how these types of situations with the divorces can be a very emotional time.
Yes. Yes.
So yeah, you got broken hearts, you've got people that are upset, or there's some animosity there. Or on the positive side, it's a friendly separation, a friendly split. And so as realtors and as loan officers, anybody that's on the team, we have to really approach that from a place of sensitivity, which we do anyway with any transaction. But there's this added this added sense of a bucket of emotions that go along with divorces. And so with that, my question for you, from somebody that's going through this, is, do we approach you as a couple, as a divorcing couple, to work together with one loan officer, just like you have your own attorney? Should they also be looking for their own loan officers to deal with this type of transaction?
I think it depends mostly on the divorce. If it's an amicable divorce and everybody, is friendly, we've done them where we're working with both spouse. There's the same realtor. They're helping them look for a new home, whatever the case may be. But if it's not
Hmm.
an amicable divorce and people are unhappy, as much as I would love to do the business for both, sometimes it's better to split it. Now, we do keep in contact with the other person's loan officer or realtor just so that everybody's in the loop, because it's a domino effect. Whether they need to sell the house to get the money out to be able to purchase a new house, or whether they're refinancing to be able to get this money to purchase a new house, everybody needs to be in the loop because we have a time dates that are sensitive that we need to meet.
Right,
So if you're
right.
working with a different loan officer, it is very important that the two loan officers communicate.
Yeah. It goes
Very
back to what we've been saying with every series that we do. It's a teamwork transaction, sorry, where
important.
we're all working together for the same goal. It's not
Correct.
we're not pitting one professional against the other. We all need to work together to achieve that goal. So, talking about these other life changes, the retirements, the relocations, the downsizing, the upsizing, are there different, or does each life changing scenario affect the type of loan, or they all kind of fall under the same bucket, or does it just really matter about the person's financial picture?
So there's different types of loans. Normally, everybody thinks about a conventional loan, an FHA loan. Perfect. But we are noticing that the majority of the divorces that are happening in older couples.
Wow.
They're becoming empty nesters. Their kids are moving out of the house, and whatever it is, whether they just stay together to get the kids through um, school, or to maintain the family, but they're older now, and so some of them,
Mm.
when they refinance, they can do what's called a reverse mortgage. So we've
Okay.
been seeing quite a few of those where they're not going to make a mortgage payment. They're going to receive money because they have so much equity. Some of these homes are already paid off. They have so much equity and they just need to buy out their spouse. But they want to be comfortable for the remaining years of their lives. So now the only thing that they're responsible for when they do a reverse mortgage after a divorce or a life-changing experience is your taxes and insurance.
Okay. And so with that reverse mortgage, though, it becomes the responsibility of just one the spouse. So the other one gets cashed out, they walk away with their money. And so, for example, let's say if it was me and I would, and I'm the one that was doing the reverse mortgage and wanted to stay in the home, that reverse mortgage contract would be under just my name. And then
Correct.
the divorced spouse would take his half, or his whatever the agreed percentage is, and go do whatever.
Correct. Yeah, yeah. That's basically what it is. On the divorce decree, it's going to tell you how much money that person needs to receive. The person decides to do a reverse mortgage because their house is paid off. They pay off the spouse, and the spouse is free to go buy. And you can even buy another property, depending how much money they're cashing out, using a
Right.
reverse mortgage to purchase.
Yeah. There was a statistic that you and I talked about earlier, and there's like 673,000 divorces in the United States per year, which is a big number.
Yeah, yeah, it is. And To be honest with you, it has been decreasing somewhat because I think people are waiting a little bit longer to get married. So
Yeah.
it's not as high as it used to be, but 600,000 in the
It's a lot.
United
Yeah.
States
That's,
is still a lot. And that's a
and then
majority.
when you do the math, you got 673 divorces, 673,000 divorces, and you have to multiply that by two. Now that's two people that need a home. So that's 673,000 times two.
Yeah,
That's a lot of properties, that's a lot of loans.
that's a lot of opportunity.
Yeah.
That's a
Yeah.
lot of opportunity.
Yeah.
And I think that there's great programs out there. I mean, it's already an emotional thing, like you said, to go through a divorce or a life-changing event. It's
Mhm.
extremely emotional. But I think that if you plan yourself accordingly, and
Right.
you know when it's time, you know when it's time to do this plan, you know when it's time to start separating assets. You're already talking to lawyers or a divorce, someone that does a mitigation for divorces, a mediator, sorry, for divorces. So you're already planning. And one of the biggest things when buying a home has always been to plan.
Yeah.
So it's no different now. If you
Yeah,
know
and
this is
it's just I think
happening,
the divorces just add that extra emotional, buying a property and selling a property is already emotional on just a regular day. And so now you add on that divorce kind of, feeling of failure or feeling of resentment or feeling of anger and all those other things that come along with that. It just makes it more difficult. And I always tell my kids, and I'm going to tell people out there is making an emotional decision 99.99% of the time is a wrong decision because it's done on emotion and not it's using your heart and not your head. And
correct.
so again, going back to, this type of life-changing divorce or losing a spouse or anything like that, it's just really to kind of manage the emotions and ask questions and rely on your professionals, which is
Yes.
why we're here and presenting this series to talk about today. No one plans to get a divorce,
No.
but 673,000 people end up in divorce. So it's something that happens. And so it's better to have a plan, have a discussion, and know that you have options out there, because you still need a roof over your head. Whether it's a roof over your head for just you or you're divorcing and you still have young kids that you still have to house, um, or just it's close to the job. You don't want to have to move across town. A thousand reasons why.
Schools.
A thousand variables, I should say.
Yeah. It's close to the kids' schools. You don't want to interrupt their lifestyle. It's
Yeah.
there's a lot of things to consider. Um, and one of the biggest things too is your credit.
Yeah.
What happens a lot of I've noticed that a lot of people when they get divorced, one spouse says, oh, I'm going to stop paying the credit cards, or I'm going to stop paying
Yeah.
stuff because you want to hurt the other spouse, not knowing that what you're actually doing is hurting both people,
Hurting
not just,
yourself.
yeah, you're hurting yourself as well, because now you want to buy something, but you decided that you weren't going to pay that credit card, or you were going to be late on the mortgage just to prove a point.
Yeah.
So if you are going through this divorce, plan accordingly. Don't let stuff go late. Don't pay credit cards late. Don't pay car payments late. It's the same thing as if you were purchasing a home as a first-time home buyer or as an investor. You want to keep the credit as clean as possible because that's what's going to determine what you qualify for.
Yeah. Yeah, so it goes back to what we're always saying. It's just, be prepared, make a plan, and there's always a solution for every situation. So that's kind of where we are with that. Anything else we want to talk about in terms of these life-changing events and maybe some programs that we want to introduce out there to the general public and let them know that they can reach out to you about?
Well, one of the things that I don't know if we've already mentioned this, but a lot of people forget that when you're getting a divorce, you can use alimony and child support as income. So it's not just if you have a regular W-2 job or you're a self-employed person, that extra income that you're going to receive, and it's going to be stated in your divorce papers, your divorce decree, it's going to say how much you're going to receive in alimony for how long, and it's also going
Right.
to say how much you're going to receive in child support and for how long. And that income, we can use that to qualify you.
So now that you bring that up as income for the receiving party, how does that affect as an expense for the other party that's paying that child support and alimony when they're trying to purchase something?
So it is an expense, and we will definitely see it on we treat it as a liability, just like any other liability, like a car payment, like a credit card. It does
Right.
count against you
Right. So
as
that's
far
good to
as
know.
your
So
debt to.
it helps one party, but then it's an expense on the other party's side. So
Correct.
and it takes you guys look at the full amount of the child support and alimony, not a percentage of, correct?
Correct. We look at the full amount. Whatever's on the divorce decree, that's what we're going to take. So
So they
we do.
need to know that too. So that's going to affect how much of a mortgage loan they can get because it's reducing their net income.
Correct. hmm
Yeah. Okay.
So those are
Things to
things to
think
also take
about.
into consideration too, when you're applying, that you have to pay child support, it is a liability. If you have to pay alimony, it is a liability. Now, if you're on the receiving end, you can use it for income.
Right. Are there any scenarios with the child support and alimony where any adjustments that can be made to help mitigate that in terms of for the person that's making the payments? I guess what I'm saying is maybe how it's classified or how it's paid, or if it's not on the divorce decree, but they've agreed to make the payments privately to each other. That's still reported. Is that how that's done?
So if it's between them and they've decided this on their own without the divorce decree, we're only going to look at the divorce decree. That's what we're looking at. We're looking at the divorce decree. If it was decided on their own, we just can't use that income
I got you.
because it's not, we don't have any way of
So it
verifying.
doesn't. So the reverse of it is if it's not on the divorce decree, it doesn't benefit the buyer, the receiving person, but it helps the person that's making the payments because now it's not showing us. So it's yeah, okay.
Like I just had a case now where on the divorce decree, they were supposed to pay 450 a month. But but we have an agreement where I give 300 because I'm picking up the extracurricular activity for our son. I said, that's great and dandy, but
The
court
divorce
order
decree says, yeah,
says 450 and we have to go with the 450.
yeah, okay,
So those are
good to
things
know.
to think about. Um, and I always tell people, just go talk to a professional so you can
Yeah,
split everything and know what you're doing.
I
You
know what
need
you're
to
doing.
cover all grounds when you're doing a divorce or life-changing um, experiences. Like I'm telling you right now, reverse mortgages are becoming extremely popular for older people because life is expensive. So they have their
Yeah,
homes paid off, but the Social Security is not kicking in, or their pension is not enough for it to cover their lifestyle. So they're
yeah.
taking out these reverse mortgages to be able to survive. And there's nothing wrong with that, to have your house, your equity work for you.
And
There is
that's what I tell renters all the time. The number one reason to not rent and own something is you will have equity in your property. And when you need to access cash,
yeah,
it's there. It's
yes, ma'am.
there. Because properties they go up in value. Always have equity. Now, how much equity depends on a bunch of things: condition of the
Correct.
home, condition of the market, location. What improvements you made. But the point is, you'll never have equity paying rent.
You will never have equity paying rent. You cannot do a reverse mortgage paying rent. You need to have your home to be able to access this money, whether it's a simple, you got into a jam and you only need a small equity line, whatever it is, but you need to have a home to be able to use that collateral.
Yep, absolutely,
If you're
absolutely.
paying rent, your landlord can do it, but you can't.
But you can't. Yeah, exactly. And rent is going up so high, it's comparable to mortgage payments. And most times higher. I've seen $4,000, $5,000 in rent payments.
Yeah.
That's crazy.
It's very crazy to pay that much in rent. Absolutely. When you can own something. And even if you say, I don't think I'm going to stay around for that long, maybe 2 years, 3 years, let it build up equity. We've seen places where equity has built up. They've walked away from the table, $50,000, $100,000 in 2 years.
Yeah.
I'm
Or
sure
even if you break even from what you've paid in the 2 years,
Mhm.
If you've paid, I don't know, 60, $150,000 over the last, 2 years or whatever, and you get that back, then you've basically lived somewhere for free. That's not the case if you're renting. You get absolutely nothing.
You
So
walk away with nothing.
yeah. And going back to the divorce, and now that we're talking about renting, sometimes because, you know, getting into an apartment or a rental does require less out of pocket fees to get in versus by a mortgage. So sometimes that is an option for people because the monies are just not there once they split their financial assets. So
Mhm.
one spouse may not be able to afford anything at all, and they have to pay rent because it's first, last, and security. And sometimes it's just first in security,
Or
which
sometimes
is
the credit is just shot and there's nothing you can do.
right. So there's
I
other options where they have to go back and rebuild, and they do have to rent. So I'm not trying to, poo poo on all renters because sometimes
no,
you rent
no.
because you have to,
You don't have a
but
choice.
yeah,
But you can make a plan. At the end of the day, I'm
exactly.
very big on plans. I'm very big on you can't do it today, but guess what? It's not a no. It's a just not a today. But let's
Just
plan
not
for
today.
6 months. Let's plan for a year. Let's plan for however long it's going to take you to get to that goal that you want to purchase a home.
Yeah. So, I mean, I don't know if there's anything else that we've left out about this to share with our general public here.
I mean, if they have any questions, they can always leave it on the comments below or contact us directly.
Yeah. So, in summary, guys, life changes will happen. And whatever your specific transition that's happening in your life, whether it's a divorce, death of a spouse, a relocation, um, a, a job change, you're downsizing, you're upsizing, all of the things. There is an option out there for you. Again, as we always say when we're doing these series, we're here as a resource for you. I'm here as a resource for you as your realtor to help you find, not just find the property or sell your property, but also to get that professional team for you. I work with professionals across the board that help you get from A to Z when we're doing these real estate transactions. So I'll be serving as your realtor here in South Florida. And if you want to reach me, I'm at 954-372-0270. And I'm Kathia Realtor on Instagram. And also you can find me on LinkedIn as well and Facebook, all of the places, WhatsApp, text, carrier pigeon, email.
We're
Again, 954-372-0270. Eileen, shoot them your contact information and how they can get in contact with you.
So you can contact me at 305-790-3143. You can also reach me on Eileen Garcia Home Loans at Instagram as well. You can leave a comment on this video and we'll get back to you. Um, and that's pretty much the best
Yeah,
way to reach us. Yeah.
the
And if
best
you
way
have
to reach.
questions on divorce, um, anything that we can help you with a life-changing event, if you need, we also have a team of financial advisors that we can guide, that can help, guide if there's assets that need to be split up, anything that you need. I mean, we do have divorce attorneys that we work with as well that we can recommend. So
Right.
just reach out to one of us for any questions you may
Up
have.
the phone and dial the 10 digits and get some help, and we'll find you the right person for your
Absolutely.
situation. So guys, we'll be back again next month, and we'll be here with a new topic. And I'm hoping that you guys are enjoying this monthly series of What Do You Want to Know Wednesdays, where it's a Q&A live, letting you know what's happening in the real estate market, not just here in South Florida, but just, nationwide. A lot of these topics, run across different state borders and everywhere, even international. We're all going through the same thing. So again, I'm Kathia Green and my partner, Eileen Garcia. We'll see you next month. Enjoy the rest of the day.
Bye.